Good morning, everyone. Hey, this is Rick Kaufman, your host with LMA Trading. We're all like-minded adults, right? Hey, I don't know what's going on here in the markets. We were sitting here about 10 minutes ago. The VIX was just hanging out right here, and all of a sudden, bam! And then, the Nasdaq popped up and went red to green. The Dow turned around and popped and set a new intraday high in pre-market here this morning. The Russell popped and it was looking like it was trending down. It was red. And then the only thing that was green, I think, was the Dow, only by a few points. And then the S&P also popped and went and set a new high on the morning. So we'll have to take a look here. I don't know if there's any news going on here. So not real sure what it's a crazy market. So with that being said, let's do some housekeeping right now. Because it is a crazy market and we really don't know which way the market's going to go, trading stocks and options have risk. You trade your own money, you can lose your own money. You can lose all of it. I'm not a financial advisor. I do not give financial advice. I do not give out, trade alerts. I don't do, just because, I do the best I can do to pick my own trades. I'm an over 60 trader, so I'm a very risk adverse. I look for high probability setups, and that may not be suitable for everyone. So you need to determine your trade style. You need to determine that. I record these as part of my daily trade journal. I record these as part of my own personal education, so I can go back and review as the day winds. So at the end of the day, and then at the end of the week and whatnot, I can go back and review these videos, and I just share them. So that way you can kind of see what I'm seeing. And if it helps somebody, great. But with that being said, let's jump into the markets here. So as we look here at the Qs and everything else, we did take positions yesterday on Apple, and we took a position on Shop also. We'll talk about those at the end of what I was seeing there. So with that being said, let's jump into the charts here. Let's go here. Let's go ahead and start with the Dow. As we look here, we have the ticks here, but the biggest thing I want to point out here on my side chart here is the VIX. You can see the VIX at about 8:30. It was like, we were planning, looking at some things here, and we was recording a few other things and stuff that we were wanting to get down. And as soon as I cut the recording off, within 30 seconds, this big, huge red candle, this is a 5-minute on the VIX, 5-minute VIX chart here, just dropped. I mean, it's just like somebody dropped a knife, and you can't catch a falling knife, but for some reason just popped. And with that, the Dow, everything just shot up. I mean, just shot up. So this is a very bullish trend we're in. And so because there's just not a lot of fear in this market, but we're looking at something to move this market, and whatever this is right here very well could be the thing that's going to move these markets higher today. So again, we might want to wait, obviously, when the cash session opens at 9 o'clock or 8:30, 9:30 Eastern time. We'll kind of get a better look at that. So but we're still kind of trading in this range here, but we did break above here on this previous high. And so, our daily squeeze histogram here, we had to squeeze fire yesterday to the upside. So we may have some continuation. The RSI showing that it's climbing, and also on our MACD, all our bars here are green. So this is very bullish. We on the ADXO, we are kind of neutral on the trend, but nonetheless, this you can see if we get a pullback to the 21 on the long-term chart, It respects that and bounces. So we get this little pullback and rest, and then we get a bounce. So, really nice, bull flags on those. And then on the daily chart, same thing, pullback, drops one ATR, hits the 50 or goes below the 50 and bounces off the one or the two ATR on our Keltner channels. We do have our Bollinger Bands are showing some tightening going on, hence why we are entering into a weekly squeeze as we have a downturn in momentum. So histogram is pointing down on the MACD. But again, whatever is going on right here is, might, carry over into, into the Dow. So let's jump into the Russell, because we do have a play on the Russell to the downside. We are looking at holding the 2260. We were down here when I this morning when I first came in here and turned on my computer. We were down to the lows here, kind of showing this. Still, we've got to. I mean, if you're the type of person thinking that we're a bull, and you're a bull, this is potentially a really nice bull flag setting up here on the daily chart, and we are above the 21. The histogram is showing upward momentum, and the same thing on the MACD. So we have the Bollinger Bands are pointing up, and we are beginning to point down on the Bollinger Bands here. So but we are still in a squeeze. So it's respecting this trend line, and the one ATR is pulling down close to my strike. So I like what I see, but I would like to put some real estate in between and go a little lower just to make me feel a little more comfortable in this. We'll see if we can pull some profit here and maybe get out of this thing. Most likely, unless it really goes down, we're not going to probably be in a situation yet today, but possibly tomorrow or even Friday morning. Friday's the 13th of all days. Oh, yay. So, but on the long-term trend, we are very neutral, and we have a red ADX up here. So this is a very bearish setup here on the long-term trend, and the indications. We have the weekly squeeze for quite some time, for the last few months here back into May. So been in a weekly squeeze and pointing to the downside with the turn back in March. We saw this high, and so the MACD is pointing down. And so I think we've got a lot more downward momentum. I'm actually considering possibly looking at this because I think long-term trend, and maybe putting some far out of the money calls, credit spreads, or pots, or actually put calls. You know what I'm talking about. But anyways, some far out of the money puts here, risking very little, and then and then selling, for a credit below that, and then see if we can get a move, a bigger move downwards, maybe into this 1900 price target, or 1950, 19.5 or something like that, and not risking a whole lot, and to maybe risk $100-$200 to pull out anywhere from 1,000 to 3,000 depending on the spread. There's one spread that I was looking at, I think for September 30th, it was like $100 spread, but you're risking $200 to make like 3,400. So low probability of success on that, but that's kind of like throwing $200 out to the wind. So but if the payoff happens and we move into money, then it could be a nice payday. Anyways, okay, let's jump into the Qs. Qs, I'm also looking at possibly some out of the money here too. We're trending down, but we've turned, like I said, we've turned green on, this, with what's pushing the markets right now, the fear. And, but we do have on our long-term weekly trend, we have some decreasing momentum here, the MACD. But again, with this market, anything can happen. I mean, that's one thing we know is this is a very, very bullish market, and it's a buy the dip market. And so people may be seeing some of these here. This might have been the dip. This could have been the dip on the daily chart. It came close here this morning to the 21. And so we see some buying going on, and this might just be what's going to push things up and push things higher. So we'll see how this plays out. But again, the long-term trend is what really dictates the whole thing. So when we look at the weekly trend and then come over here to the daily trend, and what we're seeing here is, a little bit of rest, pull down, slight little pullback, and we'll see what happens. But because of the topping and the internals, we're due for pretty. And I'm not the only one that says this, but we're due for, I think a bigger correction than what we're seeing here. So that's why I'm also thinking possibly far out of the money puts on this too, that, if we do get the pullback, not risking a whole lot, very, very low risk, risking one to make possibly 10, 7 to 10 on the return. So that might, kind of lotto trades, if you really want to, kind of like buying some lotto tickets and, see if you get lucky. And that's what it would be probably. I know it's not the best way to trade, but like I said, I think it's a setup. It's a good hedge possibly on what, while you're playing long, it's a good hedge. Doesn't, you're not putting a lot of money at risk. And if you're right, then you can turn around and close out your longs and ride out the short and be on the happy side. Okay, let's go over to the S&P here. The S&P popped here off of this news right here. And as you can see, we're just going higher right now, which this bodes well because I took a SPX call credit spread yesterday, and on this pullback yesterday back to the low. And so on expiration, I think we got 8 or 9 days on that. So I think we took it out 10 days, I think. So it'd be next Friday. So hopefully that's going to play out for us. So, I think we got 95-cent credit on that. So we picked up a couple call credit spreads or put credit spreads. But again, very, very bullish on the S&P. But it's kind of right in this 1 ATR on the long-term trend. And what we're seeing here is probably going to just be a continuation of what we've been seeing. But at any time, be prepared to see this correct back down on the weekly chart, back down to the 1 ATR, because we can get that move in one day. It shows right here. You go back, we can be in these levels where we're at right now and immediately pull back in one day. So got to keep an eyeball out for that. But long-term trend, we have decreasing momentum on the long-term weekly chart. The MACD histogram way overextended, but we may kind of been leveling off here a little bit. And but again, on the daily chart, not a whole lot to be afraid of, but I think caution is the name of the game here. Well, let's go. I mentioned earlier that I took a position on Apple yesterday. So we bought the pullback right here, and not seeing a whole lot of a little bit of movement possibly to the upside of where we closed yesterday. But still it's kind of, very neutral chart, but the indicators are telling us that we are very bullish, except that we are VWAP here. And so we are kind of bearish on the long term, starting to develop here long term. ADX is green. So we have stacked EMAs. So overall, still very, very bullish. We sold the 140 strike here on Apple. And so picked up a pretty decent little credit here, but we've got some time to go. We'll be in this for at least 2 weeks, and then we'll see where we're at there. Unless we get our rules say if we get 2 closes below the 21, it invalidates the trade. So if we get any closes in this area, general vicinity here below the 21, then we'll reevaluate, most likely either roll the trade out or we'll close it out. 9 times out of 10, I close them out, take a very, very small loss, wait for another setup, and we'll look at that. We also picked up a position on shop. We bought or we sold the credit spread down here at basically 13, I think it was 1390 is what we sold on that. So we sold the 1390, which is way, way down here. So when I look at these, these high probability says, this is a high probability of about 80% POP, high probability of profit. And what that means is, 80% chance you'll at least make $1. But this is where I believe the stock will not go. Sometimes it's easier to try to determine where the stock will not go. This also is all the way down here on the weekly chart on the 21. So it respects the 21. So, but again, what you see here, some beautiful bull flags here, but then we got kind of a bear flag and then we pop lower, and then bull flag up, bull flag up, bull flag up. Now we got this bear flag setting up here. So, may have called this wrong, but I still don't think if we get a pop to the downside. But right now 15.25 was the close, and we're trading 15.33, 15.37 in the bid and ask. So I think we might see a little move to the upside, but we're still in this tight this consolidation range. So we'll again, got some time on this. So we'll be in this for, hopefully about 2 weeks, and then we'll see if we can pull some profit out of that. We can keep some of the premium. So with that being said, guys, that's what I'm seeing in the markets. So right now, things are looking good, but of course, the cash session starts here in about 40 minutes. All this can change. All bets are off. Once we get into the live trading session. And so pre-market, sometimes we get moves that are, could be some news related, something, that's happening. Senate's been in meetings since something like 4 o'clock this morning. So may have been some news come out on this, but we'll determine that here as we go. So with that said, be happy. Make your trades safe, make your trades, do your homework, do your due diligence, and play your money, lose your money, or make your money, whatever the case may be. Make sure you click the like button and subscribe to get more of our analysis. And, I'm an older trader. So like I said in the beginning, I don't look for, risky things. I don't risk a lot of money. Just look to, 1% a day just to make, a little bit each and every day to move the account a little higher is the name of the game. And that's, keep what you got. I mean, I worked all my life to save money. I've lost a lot of money, and, and so that's where we're at. And I'm not in that game of losing a lot of money anymore. So I have never blown up an account yet, and I don't plan on it. So size quarterly is what I look at, and low risk, and always make sure you have enough money to come back and play tomorrow. So we'll see you guys tomorrow in our pre-market prep, and you guys have a great day and happy trading.